Morning, good morning.
Good morning.
Hope everyone's doing all right. Happy Sunday.
Morning, Axel. Morning, Sue. Morning, Alan. Morning, Patrick. How's everybody doing? Morning, Kate.
I am tired. We'll get started in just a second.
I'm great. Good to hear. Essence, good morning. Mauricio, good morning.
Good morning, guys. How you guys doing?
Doing well. How about yourself?
Everything good, man. Getting ready here for the weekly review. By the way, do you know when do we have to change the contract? When do we start trading the December contract? On Friday or should we start doing it now?
I forget what the website is, but we can do a Google search for it. There's a site that tells you when more volume is being traded on the upcoming contract than the current one, and that's when you can do the rollover. But the expiration for this current contract is this coming Friday, September 15th.
September 15th. Okay.
Alrighty, 10:05. We'll go ahead and get started. News this week: no news Monday, no news Tuesday. Wednesday we have core CPI, both year on year and month on month. So expect that to be a mover. Make sure you're out of the market when that releases. Thursday, 8:30, same thing. We got PPIs, core retail sales month on month, regular PPI month on month, no yearly PPI. So this will be a lot less than what this will be. You know, as kind of straightforward as possible. Everyone knows CPI is one of, I believe it's the worst of the three, but it is one of the most volatile news events you incur. So, you know, make sure you manage responsibly. Thursday, obviously 8:30, all these PPI retail sales, everything's month on month, so it shouldn't be too bad there. You do have unemployment claims too. Friday, 8:30, you have manufacturing index. 9:15, you have industrial production month on month, and 10 a.m. you have pre-land consumer sentiment, as well as inflation expectations. Excuse me. So back end of the week, a lot more booked than front half. Nothing really going on Monday, Tuesday. This past week was a short week. We had a bank holiday, so should get a lot of movement going into here. Any questions with regards to news? All good there. Okay, I will get started with dollar. Okay, dollar on the weekly. So I know we were talking about this buy side liquidity pool last week. We had not yet traded to it. I was expecting price to trade into it. Price traded into it. As you can see, we closed inside this breaker above this buy side liquidity pool. So now going into, although we are inside this monthly breaker, weekly breaker, we're above that buy side liquidity pool. So when you go down to the daily, my eyes originally go right here. Right, this is the candle that displaced the buy side. Now I'm gonna follow this. I would like price to, if it's gonna continue to go higher, do whatever it needs, and then we'll maybe potentially target stuff up here. Right, you've got a volume imbalance. I can find it. You've got a volume imbalance right here. So I think the price could potentially find a way to fill that at some point this week. I'm using this entire price range right now. I don't know if this is quite yet the high, especially that we're sitting in a volume imbalance, but I'm looking at this range entirely to see how we overall respond. There is this precipitated is not in a discount with regards to this range, so if we do fail this, I'm not going to immediately necessarily go bearish on it. I still want to see how we play it here. I want to see how we react, and if we choose to invert it and go lower, that's fine. This is really the price swing low in which I'm kind of tracking. You know, if this breaker is still in play, it would be as only into the case of, do we break this low, right? If we come back out of here, do we break this low? So really, until this low is broken, I'm going to remain bullish on DXY, but I am going to leave it with the idea that once price starts to fail this level, in this level, with regards to daily closure, you're most likely going to see the low break. But still keeping my eyes on higher prices. Got a volume imbalance here, tiny volume imbalance here, and overall buy side liquidity here, and the consequent encouragement of that breaker. Until otherwise, that's kind of my take on the dollar. Any questions there before I pass it over to Henry? Pretty self-explanatory. We took the buy side like we were talked about. Wanted to see if we just took it and then quickly reversed. We actually stayed inside and above that buy side liquidity pool. So that shows me that the market isn't necessarily ready for some form of reversal or retracement. So just going to kind of stick with the direction it's currently going in. if it decides to just keep trading higher into this consequent encroachment and not into here, I'll be looking for another swing low to potentially form for a potential market structure break. But that's, I'm not sure whether it wants to leave these two open or not. One of them is in discount, one of them isn't. So if you are curious about which one might fill, I'd be more tuned to think that this one would get filled and go higher. This one might cut through, right? So don't be, just because price cuts through here, comes up into here, don't quite expect this to act as an inversion, because price is just delivering it to a discount, so it should cut through, and then you could get something like that if we decide to go higher, right? Oops. So yeah, those are just a couple things on dollar. Really gonna just kind of stay higher pricing until we take out this low, right? This consequent encroachment of the wick is about 75% of the current range, right? That's the last PDRA that I would kind of give for higher prices. Any questions there before I pass it to Henry for ES?
Just a quick question. So based on the how that daily candle close, if it's super bullish, it will get to that consequent encroachment of Fridays, and then it could still going higher, right? Because I mean, we didn't even touch it the past 2 sessions.
Yeah, so depending on how bullish it is, if and when price gets to this level right here, it's going to be a matter of, I would want it to be very sensitive. Once it closes above the consequent encroachment, I would actually want it to be very sensitive to it if it's going to go higher, right? And if it isn't, that's when you start breaking it down into quarters, right, too. So even if we do deliver in there, I would want to know the quarter point of that, and it happens to be right in this volume imbalance. So that's a whole nother thing too, is if we do deliver to the consequent encroachment, I would want to see how the quarter point delivers. And then I would want to see those things, if we're going to go higher, act as support and go higher, right? If we're just going to keep on going higher. Same thing with the other quarter point, right? Oops. Oh, one. So the quadrants, or whatever you want to refer them to, they should eventually start to act as support if we're going to eventually fill the entire breaker and kind of make our way through it. Now remember, this is a breaker that we're playing in, not necessarily a gap, but it still is the same precedence. And maybe we fill this breaker and then find lower prices, right? And then we break something and then we go lower, right? That could be a potential play. It's just following those quadrants throughout, it's move higher. Any other questions before I give it to Henry? Alrighty, Henry, I think you are good to go.
All right, here's ES. So here on the monthly chart, you can see we traded down into the consequent encroachment roughly. This basically right here, the high of this candle and the low of this candle. The gap in between there. Traded out of there nicely, and now as I go down to the weekly chart, we return back up into this previous liquidity void that we had talked about here, trading back up into the consequent encroachment there, and reaching up into this target that we mentioned right here, this little civvy. Now that we've come in there, this past week, we began to trade it off of that. And like we talked about on last week's midweek review, we're now kind of sitting at the midpoint of a couple of dealing ranges. So if you look at this most energetic price swing right here on the daily, and take your low up to your high, we're sitting pretty nicely at the midpoint right there, equilibrium of the dealing range. We did also trade back up into this range though prior. And you see after reaching up in the premium, sold off here, and now trading back up toward that equilibrium of this larger dealing range, which broke structure under this low. I'm looking at weekly chart. Trading up through the liquidity board back down, using it as that balanced price range here, and then trading back under this low. And we're now trading back up to the premium just over the range. So with this information, and I'll point out a couple other things too. Trading inside of this business. With this information, trading up into the premium and then back down into the lower end of this busy right here, but also being inside the equilibrium of this price runner. I have to approach this from a more neutral perspective, at least going into the beginning of the week. So what I would do looking out into the beginning part of the week is just be cautious of the fact that we're trading inside of this busy. You really want to see price leave the low of this or leave the high before being interested in anything. So you could potentially see price trade back above, treat this as a balanced price range using the high or the consequent encroachment to trade higher if we do trade back up, or if we drop back down to the low, which I'm a little bit more favorable of now given the last part of the week's price action, trading under the low, mentioning the sell side right here, and then using the low of this to trade lower down into this small busy right here, which hasn't been reached yet. But really approaching it from a neutral perspective, at least at the start of the week, right? There's no obvious draw on liquidity from where it's currently trading at, as far as I see it anyway. So just pay attention to the premium arrays above, right? You have this little city right here. We have the consequent encroachment of this busy that we're trading in now. And then also looking at this opening price of this down post candle here. That's the one block, right? We'll draw that out here. As we trade through it, you can see the sensitivity of it as we go into lower time frames. Right here. Okay, so keep your eye on those things. Mark out your previous day's highs and lows and see how we're responding in those areas. I am not too interested in any trades until we trade outside either the high or the low of this busy that we're currently sitting. But we'll look at the NASDAQ really quickly. So sort of same idea here, right? We've traded down into the consequent encroachment of the busy right here. NASDAQ has shown a little bit more bullish sentiment than ES has here. But we still have a little bit of this imbalance remaining. And we can move down to fill there. You see on Friday's price action, traded back up into this volume imbalance, and then trading back down toward the lower end of this wick. And we have this remaining gap. We're trading inside of this quarter block or propulsion block. You can see it as here with these down close candles, and then trading into it here. So here, I would just watch your premium raise, volume balance, and this small city right here. And then also watch the mean threshold of this propulsion mark here. So if you start getting trading down here and see closure below this low, then we can start looking to these lows. As long as we remain inside of this range, this busy, price action is kind of in a neutral point, right? We could continue to break lower or reach up back into these highs and then look for buy side up here. So, sometimes we're just at a point where we have to be neutral, and that's just how it goes. There's not always going to be a super clear draw. And sometimes you're just going to let X play out a little bit more and provide some more information. So that's where I'm sitting at on those right now. Carson, you have any commentary, or if anyone has any questions, we can take a look.
Henry, this is Patrick. Can I ask you a question?
Yeah, go ahead.
As you were finishing your commentary on the ES,
Mhm.
and you made the comment right there that you weren't interested in the trades until it becomes above or below that BISI, I believe. Why is that? What's your thinking behind that?
We're trading in here as an area of fair value, but since I'm sitting at a neutral standpoint and uncertain if we're going to trade lower or higher out of this range, I would prefer to have the confirmation of trading outside of the range before I'm willing to enter a trade. So if I had an obvious draw in one direction, then I could be okay with trading in here. But since I'm uncertain if we're going to trade lower or higher at this time, it doesn't make sense for me to look for a trade in here, just based on the higher time frame.
Very good. That
Like
makes
let's say for example, this low was purged here, like something like this. Ran up here, and then drop down and purge this low, and then trade higher, and then trade here into roughly the consequent encroachment, and aligned with this would be a breaker, right? Low, high, lower, low. Sell side was purged, tapped into a higher time frame inefficiency, trade back higher, and then tapping into that breaker. If we were trading here, I could be interested in taking a trade off of this to look for higher prices, because that would be a more obvious draw to me with this sort of market structure. But since that's not what we have, right? You could kind of see this as mitigation potentially if we are going to trade higher. So you, instead of having a low, high, lower low, you have a low, high, higher low, and then trading higher. But since we're at those equilibriums of the ranges that we talked about, and this is already trading down to the lower end of this BISI, it's not clear to me which direction we're going to trade in. And so I don't really want to be trading inside of an area that I would see as a 50-50 shot. So from this point, price could trade lower or higher. The probabilities would be better to wait for price to trade outside of either the low or the high. And then you can get an idea as to whether we're going to reach for buy side or sell side.
okay. Makes sense. Thank you.
Ismail, I see your hand.
Hey Henry, yeah, I wanted to ask you both a question regarding that. Since we're going into this new the last quarter, which is ICT always mentions that going into the fall months, price action is going to be a lot better than August. What are you guys like looking at in terms of, other than the charts? Are you guys looking at seasonal tendencies? Do you guys even look at like commitment of traders? Anything from like month 5 that helps going into like a new quarter when the chart says it could go both ways, to kind of give you a better bias going into the full months?
Any thoughts on it?
Yeah, so I'll touch on that. I was on mute. I was talking earlier, but I was on mute. Dad, with regards to your question on that too, what it really does is it's just, if you can be patient and wait for it to trade outside, whether it's either way, doesn't matter. It's the market kind of tipping its hand towards you once you can get outside of the direction. So if it goes outside of it on the upside, that's just tipping its hand to you and giving you that extra confirmation, and the probabilities increase of it continuously going higher. Same thing on the downside. If you go outside of it to the bottom extent of it, you know, the probabilities increase that it's going to go lower. So just because it's such stuck in the range in the middle, and like Henry said, the draw is not clear, you just wait, and the clarity of the trade or the clarity of the direction happens when you actually decide, or when the market decides to trade outside of it. So that's just on top of that. With regards to the next question, yeah, you know, I think we moved a lot in the first quarter of the year. Second quarter of the year kind of did not make any new highs and lows. I look at COT sometimes, but I haven't found good timing of it, right? It's like if it was as easy as it's supposed to be, where you go and see where the banks are positioned and you just expect that. It's not really like that. Like, you can't just see it in the charts right away. It's good, and it can give you some forward sighting to expectations on what could potentially unfold. I don't use it as much as I used to. I can't say that it hurt my trading. I can't say it did crazy things for my trading. With regards going into the back half of the year, into that final quarter, you know, seasonal wise, I just like to focus on the dollar a little bit more when you're going into these quarterly rollovers, because when in doubt, even though dollar and ES, there's mixed conditions, dollar is going to show you where ES is going to go. And if dollar is going to go higher, ES will find a way to go lower, and vice versa, right? If dollar goes lower, ES will find a way to go higher. And so to me, a lot of that is just dialing in dollar where it can go, and where it currently is, and what's kind of reasonable, and where do you potentially see the year ending on dollar, because that'll put you basically in a good vicinity of where ES could potentially end up. Because at one point or another, when the market starts to trend again, or when it just starts to trend, that correlation is going to crack, right? They're going to go opposite from each other. And so if you can have a good idea of where dollar could potentially go once it starts running that specific direction, ES is going to go opposite of it, and then that's going to lead you and guide you to where it's going to potentially go. That's why right now, like, and just at first glance, a part of me sees ES going lower in the next couple months, just because of the fact that right now dollar hasn't given me a reason. Now, that's not to say there's retracements, right? We had those BISIs that are sitting in dollar right now. As price moves lower into those BISIs, I'm curious to see how ES trades, right? Does it go lower with it, and that's where you'll get like mixed market conditions, or does it go higher a little bit? But overall, dollar hasn't given me anything right now to show me that it's going to go lower. And then overall higher time frame directional bias, it hasn't given me anything. So that means in an overall higher time frame directional bias for ES, that should print out lower prices.
Guys, so just to understand this correctly, so if we were to close below Thursday's lows, which is yeah, perfect, Henry. So if we were to close under that BZ, either up or down under that one, or maybe Friday's close, then that's when you will say that the market is tipping our hand to more bearishness than bullishness. Also, the same way will apply if we close above the BC. Is that a correct assumption?
Yeah,
that can give you a good idea. But you want to look at too when that's potentially occurring in the week as well, right? Like, just because we trade below this on a Monday or a Tuesday doesn't necessarily mean that we're gonna drop down here. But if we kind of consolidate Monday, Tuesday, something like that, maybe purge a high right here and then move down through here on later part of Tuesday or on Wednesday. We have CPI on Wednesday as well, so that could take us out of either side of this range. Then you can get a better idea which one. Yeah.
The implied move for the options is 121 points on ES for this week with CPI. So I mean, if you do that, that will put us basically back to that volume imbalance up there of 45 something, 45.80 or 90. And also will take us to.
And I also, and that's another thing too, right? I wouldn't be surprised, and usually this is how this stuff sets up. You know, price will probably hang around that range inside that BISI until Wednesday, and then CPI will be released, and then once that was released, you'll know what direction potentially, depending on where that day closes. But odds are CPI will be that catalyst to at least get it outside of that range, whether it goes higher or lower. You'll see that displacement in the charts.
Perfect.
That should give us a better idea or a clearer draw as we approach the later part of the week and going into next week or the following week. Okay, good. Any other questions here? We can move into our next.
Any other questions before we go on to the next thing? All right. Well, we've got a couple trades to go over from this week. Alrighty. All right. So let's get into it. All right. After trading lower during Wednesday's AM session, I was expecting a continuation in the PM session to fill half the daily BISI. Entry in the 15-minute SIBI, stop loss above the propulsion block, or the mean threshold of it, wasn't really emotional during the trade, which was something new to me. I only had one contract with a 10-handed stop loss. Was completely fine if the idea did not work. I went in this week's understanding that short weeks offer low probability conditions. You are correct. All right, so basically it looks like entered in on this SIBI, right? Waited for these candles to fully fill it. Price obviously displaced through a BISI, inverted it. You do have a SIBI up here. You're in Wednesday's price action. Market structure shift right here. I totally see that. You're on the higher end of the BISI. I mean, you definitely have reasons to be in this trade. Let me go to the next. I know there's another picture. Okay, so that was your next trade. On Thursday, we'll go back here. So first things first, I mean, really honestly, just the only thing that I can say is potentially noting that. Oh no, you're in on the PM session on 13:30. Henry, what are your thoughts on this trade?
What day is this occurring on?
This is occurring on Wednesday, I believe. PM
Wednesdays AM. Okay.
This was
Wednesday's
Wednesday
AM session.
PM session.
Let me look at NASDAQ real quick. Wednesday's PM session.
I'm curious to know what it did after.
Yeah. So it just pretty much consolidates into the end of the day there. So my only note there would be just the time of day in which this is kind of occurring. So we've already had a large run from that 10 a.m. news, which is that huge down close candle right there. That I think was consumer sentiment. I could be wrong, but I think it was consumer sentiment, or
Right.
Maybe it was PPI or no PMI. But dropping down there, right? And then you see we dropped down all the way into 12:30, 12:45 is when we make that low, right? So then we've now purged sell side liquidity after this large displacement lower, and we're making that low during the lunch hour. Who has been profitable all day long if you've been a participant in this? It's been people who have been selling short. And so considering that we're in the lunch hour, between that 12 to 1, we could potentially look for a retracement back on stops from the day. And if you mark out your lunch highs, which were right at that can't, yeah, one candle to the right. Because you just look at not necessarily that swing, but just the 12.
Right here.
Yeah, right there. So that candle's high. We hadn't quite reached up there yet prior to this trade. So I think you had the right idea on this trade. I think I mean, we were already trading outside the lunch hour when you took your entry, right? Looks like you entered on the 145 candle. I'm just looking at my charts here. So I don't think you did anything wrong in this trade. I think you traded your model. It looks like it aligned there with the bearish propulsion block and inside the SIBI as well.
You definitely have alignment, for sure.
We definitely could have seen a continuation arc, and we did end up seeing that on Thursday. I think it's just a matter of timing, and since we already had such a huge move into the AM, you could potentially see a little bit of extended consolidation. So really nothing wrong. It's just a matter of time and experience in the markets, and then you start to anticipate these things a little bit more. So
Overall,
I think
not
you did
bad.
well. Yeah. And
Good
good
for
job
us.
managing your risk.
On Thursday, we expanded during Asia and London, filling 3 quadrants of the daily busy. After rejecting the 15-minute SIBI, I went short with one contract in the 950 macro targeting the daily busy low. After taking the low at 955, I lowered my risk and moved my stop above the swing high. Then I got stopped out for a 10-handle loss. The conditions weren't really in my favor, especially after an overnight expansion. Also, DXY swept to buy-side liquidity pool on the daily, so follow through lower was very unlikely. I mean, you kind of just said it right there. I think it did. I think we ended up maybe going a little bit lower later in the week, but I mean, you can't. This is actually really good to hear and to see is the clarity in which you know why you got stopped out, right? You already know potentially why the conditions weren't in your favor. Although this is still perfectly fine trade, right? You have your SIBI. It gave you that. Only thing I would say is maybe take a partial once you know, I'm not really good with NASDAQ. I'm not quite sure. I don't know if, this would make sense to take a partial under here or maybe obviously here, but you wouldn't have gotten that. It didn't give you that. But you're trading with one contract. So, this is, I can see this trade playing out. I think it's one of those things where, was there news at 10 o'clock on
The news
Thursday?
was at 8:30 on Thursday.
8:30? Okay. You're
And that's
coming
when we
from
really expanded lower during London or New York.
okay.
Yeah.
Yeah, and I think
So
that
all-
kind of. What'd you say, Henry?
I actually was in that same trade with you, so I took that same one as well, and was expecting that sell side to trade. This was my second trade of the day, and actually moved to break even after we reached under the rejection block with around 9:30, under those candle body lows right there. But I think you had the right idea on this trade here too. The only thing is we've been dropping lower. We had Monday and Tuesday consolidation, and then a large break lower on Wednesday and in the London session on Thursday. And then now it's Thursday and we're reaching into, let's see, touching their time frame. Yeah, so we're reaching into kind of the lower end of that daily busy, and also digging into that bullish propulsion block that we were saying on the daily chart as well. Let me see if I can, doesn't let me. Carson, can you go to your chart real quick?
Yeah. You what do you need?
Your NASDAQ daily chart.
Oh yeah, I got you.
Thank you, 2023.
Yeah.
So you can see There's the right. So this is Thursday right here, digging down into the lower half of this daily BISI and also into this propulsion block here. So just reaching into higher time frame PD arrays after digging lower all week, you can potentially see that Thursday reversal. And so then can you go down into a lower time frame, like a 15-minute on Thursday? Yeah, so we're seeing here was your London move lower on Thursday, running out south side, and then approaching south side again right here. And I think if you go into even lower time frame, you know, the 5-minute. When is this run lower occurring? So right at 9:30. Yeah, so you're kind of getting that run lower juice swing at 9:30 and then moving off that to reach higher. So one thing I like to look for is if you look at your, let me see if it shows clearly on the 4-hour chart here. Thursday. Yeah. So look at the 4-hour chart on Thursday and find that 10 a.m. candle and mark out the opening price of that candle. And then go back down into, oh, stay here a second. So you can see that in the London session, right, on Thursday, we've now reached down to fill this 4-hour BISI as well, right? So we've got the higher time frame point of interest, filling this 4-hour BISI, right? And also looking at this as potential area of inversion, right? This city here, trading down into there. Then you'll look at your 10 a.m. candle right there on the 4-hour. Where could this candle potentially, this candle right here, where could that potentially reach after trading down into this higher time frame point of interest right here? It could go to fill any inefficiency that was left. And so look in here on your lower time frame and see how that area responds at the opening price. Trade lower and then trade back above it there and then trade back higher using that opening price. So this looks like it was after your trade, actually, after the trade that we both were in there. But yeah, just the fact that it was a Thursday already reaching into a higher time frame. PD array after a large expansion in the London session, it just sets up for a potential reversal. But like I said, I don't think you were wrong to take that trade either. I was in the same trade with you, and it just didn't quite reach down the sell side there. So
not bad though. Not bad.
I mean it's a great run. Nice trade.
Alrighty, I was so confident that Tuesday was the weekly high that I didn't care. I was chasing. Looking back at the trade, I was dumb and cocky. The hard stop loss really stops any chasing because if I truly respect it, I'll have to cut it at an unfavorable spot. Whereas before chasing was no big deal, and drawdown didn't matter as much so long as the target hit. Unfortunately, that made a losing streak, and that put me in a state of panic and doubt. Alrighty. I see you have the city right here delivering in there. Market structure shifts looks like a 2022 model. I'm curious. So the one thing I'll say right here, it looks like when you got in on this candle, it looks like you went short on this candle. When all this trade would have 100% played out in your favor, would have been a great trade if you would have been a little bit more patient and let price trade one more candle, which would have been 3 minutes. 3 more minutes would have told you that trade, right? Instead of having it stop you out, it would have actually shown you that price filled the entire thing and then closed all the way below it, you could have then went short right there with your stop at this high, same high, right? I think you just didn't give it enough time to fill it, and I've had hundreds of these happen to me, right? Where you're just sitting there and you're just waiting, and you're so scared that it's not going to touch the bis here at all or the civvy, and you're just scared that it's not going to fill it. And the next thing you know, it ends up filling it, right? The only thing that here that I could correct is just a little bit of patience, seeing if price actually really wants to move inside of it and fill it, right? And you could see that it touched it 1, 2, 3, 4, right? It visited 4 times, so that's a total of 12 minutes that you would have potentially gotten areas inside this. It was just you were a little too early to it, right? Because if you're too early to it and you just start getting in right as it hits it, and your stop is the high of it, wicks do the damage, right? Candle bodies tell the story. None of these candles even closed inside the civvy. That's how bearish this move was. But you got to give room for wicks, right? You got to give it time to wick and see what it wants to do, right? This candle right here and its wick did exactly what it was supposed to do. Even the traders that know how to trade, that know what to look for, got stopped out. Just a little thing of patience. I don't think that was bad at all, though, right? You had the same idea, you had the same direction, right? The direction was there. It's just a timing thing. You could definitely, that's an easy fix. And this has happened to me hundreds of times. Going into this, I was already emotional, thinking I needed to make back what I lost yesterday. Greed made me not want to hold to full TP. Greed made me want to hold to full take profit, even though taking partials was probably the right move. Not that this loss was deserved. Who actually wants to take losses? But I deserve it for being emotionally rational. The Dow is at an all-time high. Do I even know what I'm doing? So you have a civvy, I'm assuming. So right here, I'm curious to see, did you go short in here and in here and got stopped here? Oops. Yeah, I'm just a little, I'd like to potentially try to figure out a little bit more. Okay, so went short twice. Yeah, I mean, I think that there needs to be a little bit more context. Like I see you have a civvy here, but what else, right? Because it's one of those things where civvies are good, bissies are good, but they're not going to. They're so common in the market that there has to be some substance side to it. So I would like to just know, um, you know, is there anything else that's lining up in this area on higher time frames? It looks like you're trading early in London. This is around the London move. That would just be something that I would be curious about, right? The only thing I see here is just this little tiny civvy, right? And even here, it looks like you sold short right here after price had already inverted it, right? And look at how it used it as inversion. So I mean, there's a couple, and I'm not sure where this sell is, if it's inside the city or where you were selling off of. I'm just a little curious. I think the only thing I need here is just a little bit more information, right? Because if there are some other things that you're using to get into these trades, I'd like to know so I could kind of see what your thought process was. But I will say, if it's a game of just there's a civvy or there's a bissy, let's trade it. You're not gonna get far there, right? That was a big eye opener for me, and that's why I preferably am very picky, and I can't just look at a civvy or a bissy and say, okay, that's gonna fill and go lower, that's gonna fill and go higher. I need to look at where that civvy is, when that civvy got created, what are some things that are overlaid on top of it on higher time frames, where does that reside on the daily, 4 hour, 1 hour, like all these things. Because if you just sit there and you just think that you can find civvies and bissies and it's 50-50, right? It's gonna be 50-50. The market uses these things in and out, like the same way right here, the civvy. It was used for inversion, right? If you drew that red line out, you'd be able to see how it was inverted, right? Even though it looks like it gave you some profit, right? I don't know if you got in before these relative equal lows were taken, but that would have been a good place to take partials, right? Pay yourself a little bit. Overall, the good thing is you're managing the risk very well, right? The account is 1 or 2 good trades from being above water. And that's another thing that I'm constantly trying to force you guys, is just showing you guys how to learn and take losses and be okay with it, knowing that it's going to take 1 to 2 good trades to bring you back above where you started, right? Definitely going to need more information here to kind of understand it. And it did look like you ended up, I know I'm not supposed to tie past performances to current trades, but I can't help it. I was initially thinking I had to make back my loss from Wednesday and earlier today, but I ended up taking a partial where it made sense and moving my stop loss to ensure no loss, although I can't say for sure I didn't do that out of fear. That's okay. I didn't make back the earlier losses, but I'm okay with what I did and how I did it. Look at that, right? That's good though. You did exactly what you were supposed to do. Right? You took a partial, moved it to break even, right where you said to, and this candle, instead of being a loss, and the same exact 5-minute candle, took you out of break even, right? $25. Good. That's good. That's good. And at that point, you can step away, right? You ended the week on a good note, even though you didn't bring your account all the way back up or anything like that. You ended the week on a good note. Not necessarily a lot of money made, but rules were followed, right? You followed your rules. That feels good. So good. I'm glad you ended your week here on a good note. That's good to see. Alrighty. So New York AM, 4-minute trade, inverted fair value gap plus previous day's low. Stop loss, fair value gap low. Target, previous low plus civvy. Before the trade, I was calm. I thought I could potentially reverse back up from this area after forming a 2022 model and closing above previous day's low. And an inverted fair value gap. During the trade, I didn't really feel any emotion either way. I got a loosey fill for my first contract, so I marketed it with another when price came back in to fill that fair value gap a little bit further. I did this because my risk was really small, so I felt comfortable taking on another contract. Price reacted well off the top of the implied fair value gap initially, but started to fall back soon after that. I got stuffed out, but made the mistake of going long again because I thought the bounce off the bottom of the implied fair value gap or inversed fair value gap looked promising. I was wrong again. I also realized that I misunderstood the assignment. I thought we could take 2 trades in a day. Second trade also turned out to be a loss, so I will not be trading tomorrow. Perfectly good. All good there. That's good. After the trade, I felt fine after the 2 losses. I definitely rushed the re-entry. I should have waited to see what price did after deciding whether or not to take the trade. As we can see, price actually used the civvy to go back down to take the lows. I'm annoyed with the re-entry, and also I didn't follow the assignment properly. Overall, I'm okay with the first trade I took. Henry, do you want to analyze this for a second?
This was on. Which day is this?
This is on Wednesday.
I mean, I think you had the right idea here. The only thing is, I would look on a higher time frame and see if this was just trading up into a little bit of a higher time frame inefficiency that was left, just because of how large of a displacement there was at 10 a.m. already. So a lot of times when you see that, you're not immediately going to have a reversal off of it. But I like the model that you trade. It looks like it's a breaker and a BISI, and potentially putting in that London closed low right between 10 and 11. So I think it was a good trade. I think you just, not every trade wins. and you did the right thing. You managed your risk well. So that's
That
what's
is true.
most
Not every
important.
trade wins. Not every trade wins. And then knowing that the morning trend was bearish, I should have been looking for longs. Instead, I should have been more patient and waited for short opportunities, and that would have presented itself using the same BISI that I went long and on. Right? I'm glad that you added this. Right? You didn't trade it or anything, but you know you went back and you shown what you probably could have done, what you should have done in hindsight. Right? That's perfectly fine. That's totally perfectly fine, right? You just need a little bit more patience. I'm telling you, patience will never, ever, ever do you wrong in this, right? It will never do you wrong. You can miss trades, but the more patient the patience pays dividends in this game. The longer you wait, you'd be so surprised how that emotion or that feeling you get of price potentially going away from you without you, it it's such a fake feeling because odds are when you are patient enough, price does stuff like this, right? Price comes in and out of this area that you might have been looking from. Cuts through it, all the way down, comes all the way down here, comes all the way back up, and then goes lower, right? Just a patience thing. But overall, great trade. Great trading. Okay, I'm going to share my trades this week. I totally forgot to do that. So I did not have time to trade on Thursday. I did trade on Wednesday. And really, my idea on Wednesday was kind of same thing to Henry's topic when we were talking about Wednesday's trading. What if we had been doing all morning? Going lower, right? So towards that lunch hour PM, what am I expecting? Whose stops are the most vulnerable, right? Who's been in the money all morning? Sellers. So what I did is I waited for price to see if we could get it back above here. Also, this area right here is on the 1 hour. So on the 1 hour, we had already came and filled this. Came into this BISI right here. We were pushing off of it, coming up. And if after that, after we filled it, we came back above it. Small little BISI right here on a 5 minute. Comes and fills it. Hits that higher time frame area on a 1 hour. Starts delivering higher. We shift on structure right here. We invert all this. And now basically all I'm doing in here is just using that inversion, right? With the expectation that price is going to go run some form of stops, right? Here's some stops. Very clear liquidity right there. Stop goes below this low, right? And then from there, I'm using just a lot of this inversion, right? A 1 minute inversion, 5 minute inversion, just a whole lot of inversion. So price comes, I let price deliver outside of it, come back in it, price down closes hard right here. I can already see that the opening is already higher than this, so just the tendency in here. I'd wait a minute more, using this as an order block, right? This was the last down closure before we expanded outside with displacement, right? What we were talking about to my dad's point when he was asking Henry why he was waiting for price to deliver outside of a range. It's because of this, right? Price is inside this range, it delivers outside of it. Now you want the top half of the overall range to act as support, right? Now that this has occurred, you want this whole area to act as a floor, right? You do not want it to come back into this level now that price has shown you the direction, right? The top half of it is good, right? When price comes back into it, this area is good. This area, even though there is a BISI, you want to see that remained open, right? You want it to stay heavy-handed to the upside. So I entered in with 2 contracts. You can see right here at 44.61. This trade took about an hour, I would say, not even 30 minutes, 30 minutes. Took about 20-30 minutes. Obviously clear, right? I even got out. I had a little tinier fill. I didn't let it even try to play with me. And then I also was aiming for the 1 hour. My next partial would have been that was almost 4 hours. My next partial would have actually been, I wanted to see price push up into this SIBI. It got close. You can see it got very close, but it didn't trigger my terminus, didn't trigger my take profit. So I ended up waiting, and I accidentally forgot to close it at session close. I sat in it through all the way through session, and then I thought this was going to give me my fill. It didn't, so then I ended up just waiting, and right at session open, it closed with a little bit more. So overall, that was my 2 trades this week. Not really a crazy week, right? Just this was my first partial, this was my second partial, and terminus was never hit, but I had a very clear draw on liquidity. But kind of a slower week. I was unable to trade on Thursday, so apologies there. I just got busy at work. But those were my trades. You know, it's funny, a lot of these trades that I have gotten in, I would say like 75% of them have just been counter trend retracements, right? Just very simple trades that have very clear draws to them, and the time is key, right? Time is key. This was in between that 150 macro. Any other questions there? Any other questions there? I'm gonna let Henry. Henry, do you have it up? If not, I can pull it up for you. Henry's gonna talk about this week's.
I'll just
task.
I'll take a look at my trades real quick too.
Oh yeah, you're right. Go over your trades.
I'm still in drawdown, folks. So, a couple more trades this week. Here's my account history here. So, been struggling a little bit with a couple of these training exercises, but I'll show you all how mostly it's come down to my trade management. So I have a couple of things to tweak going forwards. This was on Wednesday, the first trade, right? So trade idea was I was using a 2-minute busy and an inversion SIBI utilized to attack the hourly buy side right here in this premium 1 hour SIBI. So in here, there's a 1 hour SIBI. After we've traded lower all day and there was not a willingness to purge these equal lows. So I'm like, what's happened all day? Everyone has been short, they've been making money. What's going to happen as we trade into the PM? Potentially look for higher prices and returning back up into this range. So here, we don't show a willingness to trade the equal lows, trade back higher above these little cities right here, or this one right there, above these upwards candles, then above these cities right here. And then I take my entry right here inside a 2-minute basic and inside that inversion, just looking for buy side here and the hourly city. This is where it comes down to my trade management, right? Because between my stop and where we reach, this is about a 1-1 risk reward here. And we've already purged the highs there and there, right? So at this point, it could, this is a hindsight, of course, but just looking at how the price action has developed here, this is an opportunity where I could have taken this trade to break even instead of accepting the whole loss here, right? This is purging highs and not showing any willingness to get closure above the highs that it's purging, and then breaking back down lower. this trade could have been mitigated at break even. But I ended up taking the loss. My stop was just under the low of the candle prior to the 2-minute BISI. And I said, right idea, time was off. Because we just trade a little bit lower back into this old inefficiency right here, and then make my way to the expected target. Right? The high side and the hour sitting. So there's that one. Thursday. Same idea here. I can recognize that I may have had some emotions tied to Wednesday's trade and not taking partials or early profits to mitigate some of the old loss. But here, 3-minute BISI inside of here, first have the low on lower low, forming that breaker right here. I'm trying that out. I'm taking my trade around off of there. And we have the 930 juice swing, right? 930 opening price right here. Dropping down, shifting back higher, making the shifting market structure through this high. This is Thursday. We've already stabbed down into a low and a higher time frame PD area down here, filling that 4-hour BISI. Now I'm looking for price to trade back higher. Same deal again. Right idea in trading higher, but off with the timing. Right? This was the trade. I think was it Ismail? I think I was in here with you on this next trade. But yeah, here again, a little overzealous on the targets for the time of day, right? So I get the 1-1 risk to reward, and then end up taking my stop loss right here. And then one more trade here. I took a short here as well. Right? So now we've purged these highs, drop back down, shift the market structure, and close your eye with this swing low right here. I see this SIBI form, so I'm entering there with my stop above it. And then we trade down into the rejection block. And right when I saw that, this would have been a good area to take a partial, right, in the rejection block, just considering that I did earlier in the morning with the higher time frame bias of trading back higher into the range. But I do end up on break even here, so no loss taken on this trade. You can see right there. So in a bit of drawdown, but it's still only 1.3% drawdown in the account. That can be mitigated in just a couple of good trades that have the volatility looking for. So not bad, and it's okay.
Alrighty, you wanna tell them about the trade this week or the training this week?
Yeah, let me pull it up here.
I've got it.
Okay.
Okay, you got it.
Here's the task for this week. So this week we're kind of opening up the restrictions a bit more. In the past couple of weeks, we had some restrictions around your risk in terms of the handles you're allowed to take or the type of model you're allowed to trade. This week, we really want to see what kind of stands out to you in markets. What is your personal trading model, and how do you manage your trades? What's your style? What's your management? So I'll just read the task here, right? So the idea behind this task will be to outline your personal trading model. We want to see your favorite model as well as your style and your management. Utilize any PD array for entry. Okay, so whatever model you like to trade, that is okay for this week's task, right? What we do really want you to do for this one is to please outline your trading model. Write an outline for that on your screenshot or in your journal submission. Include if you're trading with a higher time frame bias, what time frame you're trading, what PD arrays you're looking out for, and what you're targeting, internal, external liquidity, inefficiencies, etc. So, right, anything that makes up your model, like what you would write on a business card to give somebody, say, this is my model, this is how I trade in the markets. That's what we want you to show this week, okay? You're going to keep the same balance that you finished with last week, and it will be up to you to calculate the contract or lot size. So if you'd like to trade micros, that's fine. You don't have to trade the minis, but there are still risk criteria for you. Okay. So we have red folder news on Wednesday, Thursday, and Friday this coming week. So you can take your trades after the news is released. We don't want to be in the markets prior to CPI or PPI or anything that could be damaging, right? So after the news is released, then you can enter the markets on Wednesday, Thursday, or Friday. 2 trades maximum for the week. And here's the difference for we're looking at the balance from week 4, right? If you're currently in profit, so if you're over your starting balance at the beginning of the training exercises, then on your first trade, you can risk up to 0.5%. Okay. If you win your first trade, stop for the week. If you go break even or lose on your first trade, you can take one more trade with 0.25% risk. If you're currently in drawdown, like myself, so this is the one that I'll be following, you're going to risk 0.25% on your first trade. If you win the first trade, stop. And if you go break even or lose your first trade, you can risk 0.25% again on your second trade. All right. And we're going to target and hold for a specific 4-hour or 1-hour liquidity pool or inefficiency. And these are the minimums. So you can go for more than this, but we need to reach for at least 5 handles on ES, 10 pips in Forex, or 20 handles on NASDAQ. Partials are welcome. Break even is welcome. So you can manage the trade as you want. No restrictions on that. And there's no maximum stop loss, right? So you're allowed to engage with a wider stop if that fits your trade model, but you need to maintain at least 1-to-1 risk reward, right? So we're not having like a 20 handle stop for a 5 handle target because it just doesn't make sense in terms of risk management, right? So there we go. You decide what your reward is, at least 1-1. You're responsible with that. Maximum 2 trades on the week. I'm going to miss the end right here. 2 trades on the week. Okay, I can remove that actually. So your maximum trades are going to be right here, right? 2 trades on the week. And stop if you win your first. If you go break even or lose on your first, then your risk percentages are right there. And in your journal, make sure to include the outline of your specific model. So everything that we talked about up here. And then your usual journal things as well, right? So the duration of your trade, the size you took, risk reward on the trade, time of day, draw on liquidity targeted, and make sure to mark up as much as you can about your trade. So we have a lot to talk about when we do our reviews. So make sure to include your stop placement, partials taken, time you went break even if you did, and your emotions during the trade. Okay. And then you'll screenshot your results and submit them with your journal. You can reply to the email that we sent out this week with your submissions. Okay, does that make sense to everyone? Any questions? I think it'll be a good task, good opportunity for everyone to kind of show what they like to trade in the markets. And we'll get a better idea of what everyone's personal model is as we look into this week.
We've got a hand raised.
Go ahead, T, please.
Go ahead.
Hey, what's up, guys? It's me, Jengiz. How are you guys feeling?
Good, how are you?
Good.
Feeling good, feeling good. It's been a while since I've been on these calls, so
I noticed that. Yeah, it's good to see you.
yeah, absolutely. So finally, I got some time to get back on this. Let's get down, boy. Sorry, my dog is really interested in the call. But yes, so yeah, it's been a while since I've been on this call, but and I unfortunately haven't been watching the videos. However, I do know that that initial email of this task came out like around August. So last night I decided, you know what, let me get back into it. So I rewatched that, or I watched it, understood the task, and I gotta say, this is a really good idea that you guys are doing because one, it puts the student in the driver's seat in front of everybody. And I think that is something extremely valuable. And you guys mentioned it before, the best way to, I guess, learn is to teach. And I think you guys are definitely finding value in this as well, but we're also being put in the driver's seat and we're also learning, I guess, 3 or 4 times faster because now we're in the driver's seat. We have to learn, we have to be able to teach what we're learning, and that just drives it in a full circle. So I just wanted to give you guys good just feedback on that. I love the idea that you guys came up with this. That's for sure. Now, as far as the task at hand, loved idea. I'll definitely be participating in this. But question, how do I submit this stuff to you guys?
So the email that you received with the call link this week, just do a reply email, and it will go to, I think Carson's the one who sent it out, so it'll go to Carson, and just include your screenshots of your trades and your account balance and history, and your journal as well.
I don't want to really say too much, but that also will change in a week or so.
Correct, because I know there's a website supposed to come out of some sort.
Yeah.
Okay, got it.
Yeah,
I want to know if that rolled out already.
Not quite yet, but very, very shortly. We've been showing a little bit to some of the folks who have offered us testimonials, and we're very excited to launch it to everyone else very soon. We'll have in there another way to submit these.
Yeah,
so
it'll be a lot easier.
It won't be done by email before; it'll just be done directly on the website. It'll be kind of all in one stop shop for everything we're doing. So
absolutely love that.
Very excited. Yeah, but for now, just go ahead and reply to that email.
For everyone wondering, by this time next week, we will. It'll be open to everyone. So just keep in mind, stay updated because we'll do a full call, some type of hard launch call where we have a 30-minute to 1 hour Zoom call. Answer anyone's questions, show you guys the website, and it'll be a kind of just a community building call, right? Get to hear each other's stories. If you like to drink, have a couple drinks. It'll be on like a Thursday night or a Friday night. Turn some music on, whatever, chat. We won't talk any trading at all unless you guys have any specific questions. I don't want to pull up a chart or anything like that. I just want to get to know you guys individually. So that'll be in the forefront. So keep that in mind. Once we know certain dates and times, we will make sure to let you guys know. But that will be happening in the next week or so too.
Excited.
But, yep, I'm biting my tongue. I wish I could tell you guys, but it's almost there. It's almost there. We are close. It's got some minor details that we got to kind of fix. And other than that, really, that's about all I have this week, right? CPI week. Be very, very careful. Make sure you're not in trades prior to anything releasing. Give it some time. Give it 5, 15, 30 hour, whatever it is, to let it play out. But yeah, for the most part, keep sending in the training exercises. Trust us on that. As time goes on, you will get a lot more than even you might think you get at first glance. Don't be scared. Don't be shy. If you don't want people to know it is your trade, you can cross out your name on your account. We are perfectly fine keeping it anonymous. If you don't care, you don't care, right? It's mine and Henry's job to make sure that the people in this community are not judgmental, and everyone knows that they're just trying to get better. And I believe that that's what we've built so far. But even then, right? If you want it to be completely anonymous, right? Just give us as much information as you can, and just even say, hey, I just don't want my name out there, and we'll make sure that no one knows who you are, right? As long as you can give us enough information, we'll opinionize it at our own discretion and make sure that no one knows who you are. Because again, it's not for them, it's for you, right? You're wanting our opinion on how you traded, and some weeks are going to be easier, some weeks are going to be harder, right? Some weeks we're going to try to really set you up for success, and some weeks we're going to try to set you up for failure and see how you do, and see. Me and Henry were talking about it. I truly believe, as the tasks go on, I would prefer them to be in the realm of being harder than easier, because I think that if I can condition you to trade in hard conditions, you can then create your own conditions that are a lot easier, and you don't have to feel as if, you know, anything else is a lot easier, right? You practice in a lot harder of an environment than the actual game. When it comes game time, it's a little bit easier. So I don't want you guys to think that some of these tasks are made to have you fail. Well, they aren't, but they are, right? I want you guys to have a higher standard than just expecting that you can sit there and have a 30, 40, 50 handle stop every time for 10 handles, right? It's it's something that over time you'll start to realize what you thought you couldn't do, you can do. It just takes trial, it takes error, it takes first-hand experience. So, it's really about it for me. Nothing too crazy. I would say pretty confidently we were 1 week away from having it hard launched to everyone. I'm super excited to see how you guys respond to it. It is probably it's taken a lot of work for sure, both myself and Henry. But it's cool. It's very unique. I know that there's some individuals in here that have gotten a chance to see it, but I'm excited when everyone gets to use it. You got any final words, Henry?
No, that's it for me. Yeah, just excited to launch everyone. I know I'm
Yeah.
tempted to talk about it now, but
I know.
yeah, it'll be a very, very soon, and we'll have a nice place for everyone to see what's coming out with our weekly calls, our midweek reviews, our the training exercises, and a way for you all to engage with each other more frequently.
And there's a couple other things that we're gonna talk
Yeah.
about and add potentially too. And I think I would say if you still haven't sent in a testimonial, send in a testimonial, right? We can get you on the back end and get you beta tested as soon as possible. We just figured it would be fair to offer a little bit earlier access to anyone who had a testimonial first. But other than that, that's about it. Right? If you have a testimonial, keep sending them in. We'll set up a time with you to have a one-on-one, and we'll onboard you to the website, show you how everything works, answer any questions you might have. And if you don't have a testimonial, perfectly fine. That's for us to work on to get you one, so you actually can say that this community did help, right? Everyone's in different developments, so you might not be there where you can talk about anything yet, and that's perfectly fine. But soon enough, it'll be released to everyone. So thank you guys. I appreciate you. Enjoy the rest of your Sunday. Trade safe this week. Good luck on the trading task. I think that's it.
That's it.
Sounds good. Talk to you guys later. Stay safe.
Take care.
Thank you guys. Take care.